Hey, what's up, Silver Trader FM subscribers and viewers? It's been a while since I've done a video. Been taking a break from it, Had to prioritize my life a bit. Spent some good quality time with the family and kids. Did some vacationing after working my butt off for a while. So, that's the way things work. And now I'm doing a video as an end of year, last day of the year video for the last trading day for the markets, as well as the futures for gold and silver. So let's get started. Top headline: year in stocks, S&P 500 ends wild 2011 in the same spot. Wow, it's magical how that just happens. Let's see what that means. So the S&P started about that area right here and ended at about the same place. So the change was 0.04, or is, I guess, rounded off 0%. So if you basically invested in the index, you made 0% for the year, which is a terrible investment if you ask me. Let's compare it to Eric Sprott's physical gold, PHYS. PHYS for the year made almost 12%, not bad. It's PSLV. As we all know, silver is having a bit of a struggle at the moment. Yeah, negative 4%. But let's compare it to the big bad banks that are too big to fail. Bank of America. So Bank of America is doing negative 58%, terribly for the year. Anything that the Buffett invests in, stay away from that crap. JP Morgan is about negative 21%. And maybe the best of the three would be Wells Fargo. Best of the worst of the three would be negative 11%. So, there you go. Even on a big pullback, PSLV is still doing better than the banks. And of course, gold is still outperforming all the banks, as well as the S&P index. So, there you go. Have a portfolio mixed with gold and silver. Of course, if you're able to get the physical, you're better off with the physical versus the stock, even though Sprott does back his trust with the actual physical. Let's look at the longer term, maybe the 5-year. Let's throw in the SLV since that goes back, way back. You would be at 110% in the longer term, right? And the GLD, you would be at 144% in the longer term, 5-year outlook. Same time, S&P would be negative 11, Bank of America negative 89%, JPM negative 30%, and Wells Fargo at negative 23%. So you would have outperformed all the banks and the major index, such as the S&P. So you're better off with the physical or physical equivalent of Fizz and PSLV. Other news: Euro hits 10-year low, yada yada. We all know that. Euro's taking a dump and could be ending soon. But let's take you to Provident Metals, right? When was the last time you saw a monster box for about $15,000, huh? Probably 2010. So we're taking a time machine back to 2010 and getting another opportunity to buy a monster box. But is it time to buy at the bottom? Yeah, definitely start stacking. Stack while you can. And we'll get into charts and where I think silver is going or should be going. But let's take a look at gold. Maples are looking nice at about 1620, and even the quarter ounce is looking nice at 434, 435. So please keep stacking if you can. If you got the cash, stack a little bit here, a little bit next month, a little bit the month after that, because you never know when it's going to go parabolic again. Okay, so let's just look at the sector performance for the year. Year to date, as we all know, looking at Bank of America and JP Morgan, financials did the worst for the year. But let's look at recent performance. For the markets to rally, everything has been in the green. Financials are doing a bit better. 7.6. Technology, everything's in the green. So we'll see if financials can continue to rally up. I guess as long as Bank of America can stay above $5 a share, then there may be some hope for the banks. If Bank of America fails, somebody like Warren may need to continue bailing them out. Then we shall see where the markets will go, because the markets are only as good or as strong as the financials, right? So let's look at the general market chart. So looking at the general market chart, we saw the symmetrical triangle. Then the last 1, 2, 3, 4, 5 trading days have been over that. So we're creating somewhat of a high base right here. So if we can continue this early next year, we could see a pop up and continue this bullish trend in the S&P, since we are on the bull side of this symmetrical triangle. Let's take a look at gold. Looking at gold, on the daily we are finding support on that longer term trend line. We jabbed out of it and nicely closed on the trend line yesterday, and today we tested it again, bounced off it. But let's look at the longer term trend of gold and see what I'm talking about here. So this has been the trend line since 2008. I guess we gotta look at the monthly to really get the bigger picture. There you go. So this has been the longer term trend line since the test of it in 2008. November 2008. We've been rallying ever since, so this pullback is a healthy pullback for gold, and it's continuing bull run in this original channel, and I believe that we are just following where we need to go for gold. If we ended at the bottom of this trend line, we'd probably end up at 1820 for the year 2012, but I know there's going to be fireworks and some crazy headlines. The euro failing, everyone jumping into the US Treasury, and the US Treasury being questioned for its strength or ability to continue printing into infinity. So that's where we may see fireworks and gold can go parabolic. So as far as I'm concerned, gold is still in a healthy bullish trend, and this pullback in gold is expected. May pull back some more, but hey, it's okay. It's jabbed out, jab back in. We'll see. A lot of buyers in gold. Let's take a look at silver. Okay, silver has a lot of lines, and let me try to explain what I'm trying to do here. Let's look at this from a weekly perspective first. So I have a few lines here. I was just trying to analyze what's really going on in silver here. So silver's been smacked down twice already, and I see a third attempt happening already, and it may happen. So the first time silver smackdown was back in May, and just use this to represent the flagpole of bearish flagpole smackdown of silver. It's the first one, right? And hit the low of about, which low is this, 32. And there's the second one. There's the high there, and hit the low of about 26.15. Then there, I believe, is a third attempt, but what's being tested right now is this 26 level. It's been tried here once, right? 26.30, and it took off into its amazing run up to 49. This was the September smackdown. It tested it at 26.15. Then hit its head on this upper trend line. It fell out of the symmetrical triangle heading downward, which I think is the third test. So it tested 1, 2, third time here on 26, and I believe it may breach this early 2012. If it does breach it, next support line will be this major trend line, which will be in about the 24.8, 25-ish price range. And if it does breach that, then I believe it'll make another length of this flagpole all the way down here. Then it should find support right there. It'll tap it, and I believe it will hold up right here in the 21 to 22 range, which was the previous high. Go back over here, if I can get to it. That was the previous high from the highs of 2008, March 2008 in silver. I believe it'll test that and hold it right there. It'll tap this lower one. It may tap this lower one, but it'll for sure, it should find plenty of buyers and strength at this level. And from that point on, I believe that it should do this. BAM! Head back up to 50 and beyond, and there probably won't be anything else that can stop it, unless the cartel and the powers that be just do everything in their paper control to smack it down again. But I believe they'll have a hard time doing it the second time, but we shall see. This is what I expect will happen in silver 2012. That's my prediction. Otherwise we'll just stay in this first channel, or maybe pop into the second one. But I see another parabolic event like this that will drive up silver to 50 and beyond, more likely to the 60s and 70s range, and I believe there's no stopping silver once it passes 50. So I hope everybody's having a good New Year's Eve. Stay safe. Keep stacking silver and gold as much as you can. Just a reminder that, you know, whenever you feel defeated in silver and gold, is usually when the turnaround and the bullish run continues, right? Whenever you're spooked out of your position, whether it be in paper or in physical, hopefully not in your physical stack. Don't touch that unless you really have to pay off some bills or taxes or whatever, you know. Whenever you're spooked out of it is usually when the market turns on you, and you're gonna feel like, oh crap, why did I sell all my positions? Why did I not hold on to my silver when I bought it in the 20s or in the 30s or even the 40s? Because once it's already over 50, you'll be thinking like, wow, silver was such a discount back then. How foolish of me to sell off into this scare tactic that is basically a bullish pullback. Well, take care guys, and keep stacking the real money. This Silver Trader FM. I'm out for now. See you in 2012.